What's going on, guys? So we're going to discuss about today's U.S. markets and why are we seeing these type of directions so that it could help you with fundamentals. So the next time you look at a trade, you're going to pay attention to news sentiment, economic data, and it's going to help you with a bias. And whatever technicals you look at, you're just using that as a confirm within the direction of the bigger picture. So starting out, just to start off today, we did have US CPI data that came out. And as you can see in the red, we could just see that CPI did come out lower than expected. So understanding this from a fundamental perspective, like we're going to focus on central banks, right? So the Federal Reserve, they're pretty much overall in a hawkish pause stance. So meaning in the rate decisions, right? Lately they've been pausing rates because they're concerned about inflation rising in the short term because of the uncertainties of tariffs. But seeing this lower print does kind of help ease off those uncertainties. It wasn't a surprise, but it was still lower than expected. So with this type of print, what we expected, because we did trade live, as you could just see here, we go live for data and all the live calls are recorded. So when that happened, this was the trade ideas that we wanted to pay attention to was in red. We want to see the dollar push lower and we want to see equities push higher. So from this print, why did I take advantage of Nasdaq? If you didn't see, you could check my stories on my Instagram. Uh, I wanted to take equities higher because with a lower print of inflation, this goes along with the actual sentiment. So when I'm saying sentiment, what do I mean? It's going on with risk on markets, pretty much market greed. Because on like this weekend that passed, or like Saturday and Sunday, we had headlines. Let me try to show you guys here with US and China. And as we could see that tariffs on Chinese goods, they dropped to 10% from 125%, right? We see that China cut tariffs from 125% to 10%. So even though the cuts are temporary, this is de-escalations. This is opening up opportunities for better trade wars. This is what the markets wanted, right? You can see here the US and China, they cut tariffs to ease trade tensions. So this is good for the global economy, right? So the fact that if the US and China could get along, this is also going to benefit the other markets, right? So maybe we probably see if Europe would start playing ball, maybe we could start seeing Japan play ball, then we could actually see positive talks from trade wars, right? And through all of this, this should be extremely positive for the US, right? Because why wouldn't it be? You know, but like we're finally going to start making the US is finally going to be getting money from actual trade instead of other countries profiting. Now we're looking to see US profit. So now we just have to see, does the market see it in that way? Right? Do the markets see it from that positive outlook? Right? Because if the markets see it, we should actually start seeing equities rise. So this is why when we traded data, if we got a lower print, and I told everybody over the live call, a lower print would be good for equity buys instead of dollar sells because sentiment is is bullish for equities. And then the data also supports that. And not just that, right? Because I'm gonna show you guys here. Um, like in a live stream, you could watch economic data, right? And we could actually see that Saudi and the U and Trump is at Saudi Arabia right now. And we can see that they're willing to invest $600 billion in the White House fact sheet, right? So they're investing. He went over there because they're investing billions of dollars into the United States. That's another thing for positive markets, right? That's obviously market optimism. So we have all of these reasons that is supporting equity upside. So now, if I show you guys, looking at Nasdaq, looking at S&P, US 30 taking its time, but we can see the VIX is still lower. Now we're seeing that rise in equities all because of all of these things that happened today is aligning for one direction in the markets. So where would we place our entries, right? So what I want, where I took my entry was just a break of structure. So just show you guys here. When the data came out, I just entered as market started breaking above structure. My entry was above there, which is totally fine. And I had my stop loss just pretty much in the middle of the range because if price action doesn't follow this and we see that equities push lower, I'm not going to want to be in that trade anyway because nothing supports a risk off market. So this is why I was willing to have a tight enough stop loss. But this is a good example. And then if I'm looking at the lower time frame, right, I go to the 5 minute, we could see that we had an order block here because if you could have waited also, and then once you took an entry at that break of structure, you could just see price action just continue to push off in that direction. This is how I like to look at my entries from data. So this is the trade that I have taken over the live call when we was trading inflation. I didn't trade gold to the downside, but this also set up for good scalps. But my entry is up here at that break of support. And this happened because sentiment, this is when the China and US headlines on tariffs actually came in, right? So that was the actual initial move was right here when the markets actually started pricing in the positive sentiment coming in place because gold is a safe haven asset. If we don't have reasons for a safe haven, reason for it to rise as a safe haven, right? A lot of buyers is going to start leaving the gold markets, right? And then start investing into riskier assets like equities. So the fact that we're seeing trade tensions ease, this is what set up for those gold sells. So if this risk off sentiment continues, I would expect gold to continue to push lower because moving forward, we still have to pay attention to headlines, right? Because what we really got from this meeting that happened so far, let me just show you guys because they still haven't discussed because you can see that he might meet with the Chinese president at the end of the week. He might. So if he does, that's going to be big, right? Because we can see they haven't discussed anything on cars, steel, or aluminum or pharmaceuticals, that's extremely important. So if you're not talking about that, right, that could possibly lead to, okay, so what did you guys really talk about that was positive? Because the markets, all that matters is for now, what matters is it's forward progress. But eventually the markets is going to pay attention to, okay, did y'all sign any agreements? What was the discussion about? And then does the discussion have any meaning towards actual tariffs, right? Because this stuff right here is what we need to focus on next. So as of now, as long sentiment continues this way, it will support equity upside. We will see gold pushing lower, right? Just the reactions that we have here. AUD is stronger, NZD is stronger. We see CAD gaining a little strength. The yen is weaker and the Swiss is weaker. So for now, we got a risk on market today. Hopefully you guys took advantage of it. If you guys have any questions, go in the comments. Hopefully you guys took some good trades. If not, you can message me on Instagram. Have a good one, guys.